Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. Corn futures appears to be finding some support ahead of tomorrow's WASDE report. The initial decline from the July 11th top that came in and made a low at 368.5. We took a measurement of that move and compared it to the most recent drop off of the most recent high. A 100% movement of that length would land at 357. And this is where we thought that potential support or potential target may lie. We can take increments of this same move, whether they be Fibonacci or some key incremental levels in between. Here we measure off 88.6%. That's simply 1/2 of the square root of 3. In doing so, we see the low came in very nicely up against this area here, which also happened to coincide with our 2x1 downside angle. After having made support at this number, the market has been consolidating a bit going into the WASDE report. And now we have the 10th coming in as a potential inflection point, which could potentially stand as a demarcation of a down leg after that report comes in. Additional levels of significance for this September contract lives at the 363 number, which is right inside of where volatility-based support used to live. Volatility-based support has now made a shift down to about 356 to 349. And so this next area, in the event that the market does make a downdraft, could be where we find our next areas of key support. Overhead resistance lives at about the 180-degree mark, which is at 382.5. And this is where we anticipate the market finding strong resistance in the event that it does rise going into the rest of this week, or even after the WASDE report. The upcoming timeline that we're looking at for this Friday is also very important for this contract. So somewhere near that WASDE report, we do anticipate a potential inflection point where the market can, in fact, reverse. This week, we anticipate the market continuing to simply move sideways into that report, and from which point we're looking at potential volatility to kick in from there. The price action for the December contract was very similar in nature, finding support at 374.5 last week. We can also see that the downside 1x1 angle proved to be very good support when the market made a test of that level twice over the course of last week before making its final low. And from here, the market has moved up to sideways going into our timeline, where we can see a very nice inflection point occurring in conjunction with the WASDE report that's due tomorrow. From here, we anticipate that the level of about 390 to 392 is good resistance. And if the market's able to break above here, the subsequent levels of resistance would live somewhere near 400 and then at 410. Downside potential support continues to live at the same areas as before. What we're looking for right now is the potential of increased volatility after that WASDE report is released. Like the September contract, our volatility-based support zones have made a shift. Volatility-based support from last week is what held very well. And now our new levels of volatility-based support for the December contract lives at 364.5 down to about 355, 356. So from here, we do anticipate that the market can continue to move slightly up to sideways over the next few days, from which point, depending again on how that report does come to fruition, we're looking at downside movement that would blow through the previous volatility-based support levels, and we're looking at a potential target somewhere in the neighborhood of 363.5. September beans had been holding support near the 982 to 983 number for quite some time. Finally, last week, that area did break, and once the market was able to break it cleanly, we saw a nice little downdraft from there that came in and actually found support near our 1x1 upside angle. From here, we can see on Friday, then on Monday, the market continued to hold support near this area, and over the last 2 or 3 days, the market has been slightly up to sideways, having given up much of the gains from intraday trading today. We anticipate that resistance overhead near the 982 number will perhaps be good resistance for the balance of the week. And in particular, we can see that the support that came in near 945 is in conjunction with prior resistance before. It is not uncommon for prior resistance to become future support. This retracement that we're seeing from the recent low up to the next high comes in right at about 68 to 70%. As long as this market is able to hold above 945 or so, we could see maybe some reasonable sideways to slightly up movement for the next week or two. Beyond that, we do anticipate continued weakness coming into this market. And so outside of a weather event with the closing weeks left here in August, we anticipate that soybean will continue lower for a number of weeks. A couple key levels on the horizon for the September contract would be resistance overhead at 998, and then we have support potentially below at 935.5, and where we have the midpoint or potential nodal area at 966.5. Around this area, we anticipate potential strength above the 966.5 and continued weakness below that same 966.5 number. Upon breaking any of these thresholds on either side of the node area, would be an indication of continuation in that direction. For now, we do anticipate the market not moving up much higher than that 998 number. From there, potentially failing, and then coming down to test the 935 and eventually getting down to about 900. The window of opportunity for the September contract is drawing to a close since it's going to be expiring next month. And so its ability to actually move down to that target can be hindered because of lack of time, at which point we would see a follow through into the next contract instead. The formation on the November contract is much like that of the September, where past resistance has now become future support. It is no surprise that the market is bouncing off this level, although the next time it comes back down to retest this area, we anticipate the market would continue to trade through back lower. The formation, as we can see, is very similar to that of the September contract, with the exception of the actual numbers being a bit different for the key areas of its point of control, etc. Like the September contract, the November contract also came in and found support at a key Fibonacci retracement level of 61.8%. And after having come in here, it's not uncommon for markets to actually bounce off of these key Fibonacci thresholds. Again, what we're looking for here is for the market to make a marginal advance, if it even has the capacity to do that, and that advance would perhaps find resistance near that $9.99 to $10 mark. It would appear that the events that led to the rally in wheat from late June through early July has not come to fruition, and in doing so, the market has given up all of the gains that it had in that first week of July. In fact, not only has the market given up all of its gains, it was not able to sustain support at prior highs, and the market has given way in a major way, indicating that continued weakness is probable for wheat futures going forward. This market has recently found a little bit of support near the 455 number, but we anticipate, given the nature of the way the market's been moving, that this is simply a continuation pattern that will in all likelihood lead to further down action, where the market has a very good chance of going down to test 430 before coming off the board. That 455 number happens to coincide with our 90-degree mark at 455.5. And from here, the market does have the potential for volatility-based support coming in near the 448 number. But in all likelihood, we anticipate that the market would trade through this area, even if it were to find a small bounce near this volatility-based support zone and make its way down to about 419 in terms of a realistic target. Cyclically, there is the possibility of a small bounce that does occur next week. So what we could be looking at is a market that perhaps comes in, touches volatility-based support or somewhere in this area, and then for about a week it moves up, and then from there look for it to continue back down again. Unless there is some change in the narrative for wheat, we do anticipate continued weakness for the upcoming weeks. The Elliott wave projection that we had labeled on this chart is now broken. Given that the market now has violated the previous wave 1 high, this wave 4 now is no longer a valid wave 4. We're simply looking at a massive ABC correction of sorts. And even if the market were to pull up from here, a wave 5 finding resistance somewhere in the neighborhood of 500 to 510 is in all likelihood what we'd be looking at, where we would see a failed wave 5 with continued action back to the downside. December cotton, on the other hand, is moving up very nicely. And if you recall, we had actually given you a couple key levels as a precursor for the potential for upside movement. After having made a significant low come in near that 66.15 number, our metrics suggested that once price was able to get past 69.15, that there was a good shot of this market potentially making it up to about 72.15. The market has broken through some of the intermediate resistance points in between, and now we find ourselves in front of a market that has a very good shot of reaching that minimum price objective of 72.15 that we discussed. If and when this market's able to break above the 72.15 number, the possibility of moving higher and potentially testing upwards of 75 is also in the cards for this contract, but the way in which it's moving has been looking very crisp for us. We do have an overlap of volatility-based support resistance coming in, and now the market appears to be breaking through this area here. And as you can see, volatility-based resistance is also making a shift to the upside, suggesting that the market does continue to have the potential for more strength overhead. We do like the way in which it's moving, and the metric levels that we had discussed previously are all coming to fruition. The market started moving up with strength when it hit up against our arc swing tangential move against our circle. And as you can see right up against here is when the market gave us a clear indication that the potential for upside strength was in the cards. We're looking at a potential continuation move here, suggesting that the upward movement up to 72 and change and beyond is in the cards for December cotton. In closing, we'll have a look at the September crude contract. If you recall from several weeks ago, after the market made a higher low that came in at the 43.90 number, we made a handful of projections, suggesting that the 50-50 mark was perhaps one of the most important for us to look at for this contract. And what you'll notice over the last week and a half to 2 weeks, the market has had a very difficult time of getting through this area of 50-50. In fact, the market made a move up to that number pretty much. And after having done so, we can see a very nice consolidation sitting right up against that one-to-one correspondence of the previous move that we had measured up from this move to give us the projection levels that we're now using or looking at. If and when this market's able to get above that 50-50 number and post 2 to 3 closes above that number, we anticipate that the market then would look to reach about 52 and change at a minimum, with the potential of reaching even higher. But as you can see from here, even when much of the pundits were suggesting that the market was looking to move down, we had long suggested that the low that came in at our key demarcation mark of September 21st was in fact a low of significance. And in doing so, the market has been moving up very nicely since that timeline, and the trend could very well be changing from what had been a very long-standing downtrend to the uptrend that we're seeing develop right before our eyes. Thank you so much for joining us for our weekly market update. Look forward to touching base with you again next week.